I came up with this whole book. It is one book with all the information about loan appraisal. And today I will share directly what I wrote and what I discovered, what was in my research, and it is only time that it will limit us. This whole book, you can look at it. What is the title? Loan appraisal. Our business of money lending, our business of giving out loans, it is all about appraisal. When we mess on appraisal, we have messed on the whole entire business. Is that true? Now, when you understand that in the modern situation, customers are exposed to information. They know the legal practices. They know the legal procedures. They know how long it will take you if you take them to court. They will even advise you how you are supposed to go to court. Are we together there? It calls that at the time when you are going to give a loan, you do a very good appraisal. When you cook the documents, you will cook your performance, but you will not defend your life at job. Many of the clients that we say they default, it starts from the process of appraisal. You did the customer, you didn't look at the cash flows of the client. Are we together? And for you concentrated on assets. Remember, some of these assets may not be bringing money to the client that you are giving a loan. Are the assets generating income? They are assets because he accumulated money some time back and he got a house somewhere. It is there, but no rent is coming out of that what? That house. You go to a retail shop because for you are on rush to close a sale. You are rushing and because the customer, you are seeing stock and all that. But the stock you are seeing, all suppliers, about 10 suppliers are still demanding money. You know how we deal with that? Ask for receipts. You will find there are more of invoices. I don't know whether someone is understanding the language I'm using there. Between receipts and invoice. You are seeing 20 bags of sugar, but he has paid 0 coin. 50 boxes of water, he has not yet paid them. And you are considering all of this to be his capital. Stock. And when you bring a loan, and they are saying, I think this client, we can give him 20 million. You give out your 20 million, but in reality, the client qualified for 3 million. A loans officer is a financial advisor. You are more of a doctor. If a doctor gives a wrong description, you end up killing the patient. And when you see a loans officer who's struggling with some of these issues, is either like a doctor who gave a wrong description. Because you see, when a patient is sick, for her she wants what? Medication. And may even tell you, you give me at least like 20 Panadols. I don't know whether you're understanding my point. Give me. Because he's feeling the pain is too what? Too much. But you try and do that. You will lose the patient. So when we are trying to understand these clients, we need to go back and look at their actual affordability. That's why we talked about the difficult and the sophisticated clients and all that. At least we know them. I remember in my career, at some point, I went to appraise a client. And I'm giving you a scenario which I met. I went to appraise a client, and listen what happened. The client was dealing in Waraji, local beer. You know Waraji? So I went there and saw about 20 jerrycans in a room. And I was dealing with micro loans, these small loans. Said, this one at least I think he qualifies for about 500. Now, I think sometimes before you go even to the field, you need to pray to God to guide you. In the morning, I had made a prayer that I don't need God help me not to meet the defaulters today. So, as I tried to reach where the business was and looked at the stock, I started with one of the jerrycans. I opened, there was Waraji. The second jerrycan, all was water. Now, the client knew that at least I will start with these first ones. These first what? Jerrycans. So the first jerrycans, I opened the first, I moved in the middle. Before I could not even end up going to the last ones. I identified there was only water in the jerrycans. You can look at that.
There was a client who told us that he was making a profit of how much? 20 million.
Per what?
Per month.
Okay.
After 2 weeks, then cashier akaguza manager. Omata okukora amagoba ga milioni 200. Awatu naenda milioni 6.
That is the question.
Nakora amagoba ga milioni 200. Sitagumisiriza omwezi kamwa akatunga amagoba ga milioni 200, then coming for 6 million. Kanjole kekiziki. The loans officer convinced us yagamolo mseja nakola same. He gave him the money. He suffered with the loan.
Definitely. It was not optional for him to suffer. And by the way, me in my career as a manager, I think this is a feeling. I'm presenting this to even to ministry to help Saccos. I'm saying that the structures of Saccos need to be revised. That certain risks must be transferred to the approvers. I will not find it hard to say that every loan in areas for 90 days, a loans officer pays 2% of that loan. You will not fear any defaulters. I know. Okay, I will not mention the institution. I will reserve the institution. I went to one of the institutions, and the CEO was fired, and the managing director was also fired for loans not performing. I sat with management in Kampala. We had a deeper discussion, and I said, I have a logic to help you clear all the areas. We moved and said, any loans officer whose portfolio is above 10%, and we have seen, because loans were not performing. And the question is, who approved the loans? We shifted the risk now. You see, sometimes, I know me where I have grown, I believe in performance. And even in my clients, I commit to them. I say, if I come and train and people don't perform, I can refund your money. But unless you are giving assurance that these people won't perform. So, what happened? We shifted this and we said, where is the problem? Loans officers were issuing loans to themselves. I don't know whether you are understanding my point. But in the names of their clients, the staged clients, a wife, a daughter, a son, a grandmother. And we said, we are going to hold the salary 50% for those whose PAR is above 10%. You are getting half salary until you sort your portfolio. Within 3 months, we had about 5 resign. Definitely, we expected that. When they resigned, we recruited new people. They went to demand money as if they were mad, because they didn't have any relationship to deal with those people. So they were doing their what? Their job. Those who were trying to cover these people had disappeared, and the umbrella was the room was now open for the team to do what? To execute roles.
You have retained that customer.
Yes, because the customer knows that the person who gave out that loan used a wrong route. You see, as you're looking at retention, you also need to retain good clients. One of the challenges that we find are also our structures and policies. We must agree with that. As a trainer, I'm telling you this, but because I'm trying to help you that whenever you are making these decisions, also have this in what? In mind. That, well, I'm bringing this client, but does he really qualify? I'm defending this file in committee. Does he really qualify for this money? Because management will sit down and look at how all this has been happening and may make any decision anytime without your involvement. And this decision that is made will come directly to affect you. Today, like what I've shared here, you see, management is very different. They may tend that that one we cannot do, but even after here, in 2 days they implement it, if it is the only solution to solve their what? Their problem. So, in your position as a loans officer, you have to be clean. You go to the bar, the guy buys for you a beer, and you come here defending all the lies. Because the guy gave you. I had one of my friends used it to date clients. Now, what happened? Most of his clients started falling into what? Into areas. Why? Because they think the husband should pay. But this same guy, his capacity would not even pay one client. And you know, when you are a loans officer, you come in suits and all that, you are smart. Someone thinks you are full of all the money and sees the potential of paying. Aha. So I can tell you it ended in tears. And the other communication I got was that he was also eating with them. He gives the loan, he tells you, you borrow me about 1 million. It is okay, I will give it to you. We shall handle that. So when he comes here, he tells you why the customer is not in a position to pay. He died, his mother died, his wife, and he knows, he looks at lies to tell you why the other customer is not what? Is reason it's because he ate part of that what? Part of that money. So there are things as a loans officer, there are things as a finance person which you need to avoid, because when you fail here, no any institution wants you. Probably if you go there and they get to know how you left the other institution, they will be looking at ways how to get you out. You, in your career, look at building your career. Grow your career. It is good to start in a Sacco, move to a bank, a commercial bank, and all that. The manager will be happy with you. Will say that is someone I mentored. But if you are dropped from a Sacco, now you are with a money lender somewhere in your small room, and you all look like court bailiffs when they are stuck. I know there are some loans officers who want to play those games. When the client here is given a loan, then he takes him to another money lender. Says, I think now, because you wanted 3 million. I have someone who can top you 2 million.